So this person, I'm assuming you are based in the Gulf area, but you asked, and I know that you knew it was a bit of an unusual question, but anyway. So if I move to Mexico as a U.S. citizen, so I'm assuming that you're in the Gulf area and you're thinking about Mexico for whatever reason. Okay, so that's a bit different geographically. So you want to move to Mexico with either temporary or permanent visa and keep remotely working for my current employer, which is US based. Do I have to pay taxes in Mexico? I know I can have a tax exclusion up to 108,000. However, I've also heard that I wouldn't have to pay tax in Mexico either because I work for a US company because I'm not a Mexican citizen. So, okay. So in terms of the point that you raised about 108,000, I think it's 112,000 going into the new year. That's the foreign earned income exclusion. So for those, and this bit will apply to a U.S. exposed person, whether you have a U.S. passport or green card, regardless of where you reside. Okay, this is probably the best benefit you have, or any U.S. exposed person has when working abroad. That's a Section 911 foreign earned income exclusion. It can be enjoyed in one of two ways. Firstly, you can qualify under the physical presence test, so or the bonafide residence test. That's the second one. The first one is easier to understand in that it is objective and it's quantitative. The second one is less easily understood because it's subjective and qualitative. What do I mean by that? So the physical presence test, it simply says, hey, stay out of the US, don't spend more than, let's say, 30 days on US soil or US airspace, and you can qualify for the physical presence test. The second one, so you have an actual amount to count, right? The second one is more like a statement of intent. So it says, well, there's no exact number of days, so it's like a gray area. But once your intent remains to be a bona fide resident of another jurisdiction, so you have a place of abode there, you have a job, you're paying taxes there, so on and so forth. Well, yeah, okay. So you qualify under one of those two tests, and good. So you can the first, let's say, 112,000 of your income, your earned income. So I'm not talking about investment income or anything. Your earned income will be sheltered. You still need to report it, but it will not be subject to U.S. taxes. Okay, so that's on the U.S. tax side. To the other question that you kind of were exploring, in terms of Mexico, like most of the jurisdictions, they have their laws around immigration and tax. So I know you mentioned that you'll be there on a temporary or permanent visa. That's an immigration perspective. And just like in the US, immigration laws are separate from tax laws. So in Mexico, there are something equivalent to like a center of life test. So for example, if you have a home or whatever, but the more important one is the 183-day test. So if it is that you spend more than, let's say, 6 months in the year in Mexico, then chances are you would be considered Mexican tax resident and you will be subject to tax on your worldwide income. So even though this income that you're earning is from a US company, may even be paid into a US account, you're earning it while being based in Mexico after having triggered, presumably, Mexico tax residence by virtue of being there for a certain period of time. And so therefore, I said a lot of things, but the bottom line is you will be subject to tax by the Mexican tax authorities on that income.
Please subscribe, like, share, and comment below. Our books and upcoming events are available at htj.tax. Email us at help@htj.tax. htj.tax to engage us, to advise on international tax or business matters.